Joining me now is Brendan Capstick from Nedbank Private Wealth to give us his take on the market's activity. Brendan, thanks so much for your time this afternoon. So trade talks still top of mind as the August 1st deadline fast approaches. We are waiting on the outcome of the talks between the US and China. It is day 2. And back at home, jitters all round as SA seeks to seal a deal as well. Are those concerns and the potential impact of a 30% tariff on SA exports weighing on the rand in particular? Just looking at the rand dollar pair, it is above the 17.90 mark, really nearing 18 to the dollar.
Yeah, good afternoon. Thanks for having me. 100% right. I think there is uncertainty in our local market looking towards this 1 August deadline for our tariff deal. I think maybe let's just look at it broadly. We saw the 15% agreed for the EU. 14% of the US imports come from the EU, so that is material tariff deal that's been concluded. I think that's where you see the DAX and the CAC up north of 1% as certainty is moving into the market. Then, of course, we've got the big trade deal between the two international heavyweights, China and the US. Of course, we saw Scott Bessent and his team out negotiating that deal. We've got the 12 August deadline, but the consensus in the market is that we'll most likely see another 90-day extension.
Yeah.
So I think on that front, I think certainty coming into the market, and we're seeing some green across the screen, and again in the US, all-time highs from the S&P and the Nasdaq. Again, this locally, as you've mentioned, the 1 August is the deadline for our deal, the 30% and the possible 10% on top for being part of the BRICS, which won't be good for our exporters. So that is uncertainty. But I think, as you mentioned, the dollar index, the DXY, the dollar's up nearly 1.5% this week, so firmer. Maybe some safe haven buying on the dollar side, but I think a lot uncertainty. I think for our market, still looking at what our deal will look like on Friday.
So a twofold impact here. We are seeing a stronger dollar, and we are also seeing those trade jitters weighing on the local currency. Let's move over to some company news. Brendan, Kumba out with results today. Revenue under pressure and profit flat. The miner pointing to a subdued iron ore market on the back of trade uncertainty as well. What did you make of those numbers?
Yeah, of course, part of the Anglo stable. We saw Volterra yesterday. I think the market was expecting, it's better than expected. It was not a great set of results. The HEPS was pretty much flat. We did get a dividend, as you mentioned, of 16.60, but that was down. So I think within Kumba, there is quite a bit of headwind still on that. With the capacity on the Transnet line, I know that has been improved from a partnership point of view, but I think the iron ore basket price is still under pressure. It's not really moved with the rest of the basket prices on other metals and other minerals. But I think, all in all, I think the market is happy with it. So far, it's up 5% roughly thus far in trading. But I think on that front, a lot of that buying probably hung as we don't know what's going to set on the China side, their demand, as you've alluded to. So I think the market you're taking a bit of a longer-term wait and see. I think they did also mention that they will maintain guidance for the full year number on that side.
And over on the retail side, Boxer out with an update reporting an increase in turnover and affirming that it is on track with its store expansion plan. That share price, the last time I checked, jumped over 3% this afternoon. Is this on the back of the update, or are we seeing some sort of optimism on the back of the recovery the JSE is staging today?
Yeah, there could be some buying and coming back from the weekday, of course, yesterday or so. But I think if you look at that 17-week trading update, a decent turnover number, I think around 12%, like for like, as you mentioned, up 3.9%. On that front, that is a growth stock. I think the market really is looking forward to this, and I think management has guided that they will deliver on that store rollout, probably converting some of the underperforming pick and pay stores as well, as they've highlighted. So I think the market probably has re-rated. I think the share price was under pressure for the last couple of weeks. So I think the market looking forward. Maybe as well, possible interest rate cut later this week on Thursday, as the retail sentiment probably comes back into play. But again, decent guidance from Boxer.
And that was going to be my next question then, Brendan. If you are expecting a cut from the SARB, and are you expecting a 25 basis point cut?
Yeah, I think the consensus would be the hawkish SARB, as we know, probably take 25 basis point cut. It's going to come down to the vote and, what that direction tells us. The previous meeting, there was a member that wanted 50 basis point cut. So that will give us guidance for the rest of the year. Inflation came in at 3%, but as you've alluded in your earlier segment, targeting a 3% longer-term target, maybe a slowing of that cutting cycle, possibly. So I think we're expecting 0.25% cut on our front, and we've seen the financials and retailers react thus far today.
And before I let you go, let's take a look at what's playing out in the property sector. We had numbers out from Shaftesbury, growth in rent and valuation, giving the counter a boost. And that property company, of course, operating mainly in the UK. Is this one you look at?
We don't hold it, but I do look at it. I did go through it. It's the footfalls improving on the west end, as you mentioned, the Covenant Garden assets, like-for-like sales at 2.6%, and the net debt to EBITDA has improved quite a bit from 10.9 to 6.1%. So I think really improving UK environment, their GDP figures on the UK really improving, as well as they've been cutting the interest rates. So again, I think it is a GDP play really on the UK that's leading into this recovery on Shaftesbury.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on what your industry peers find interesting.
A small little industrial company in South Africa, specialized in consumables, auto, agri parts, capital equipment, that type of thing. They built up a really good portfolio of brands over the years, about 400 different brands there. What I like, though, is that they supply and service these industries. So they sell you the parts, they do the service and all of that. So that's very attractive. And they, as we've discussed before, they've been cleaning up the capital structure there, getting rid of the pref. So I think there could be a nice uplift in the near future there. And we think it's a well-run, solid little business.
Here I am in 2025 calling a COVID recovery stock, but frankly, that's still what City Lodge is. One of those businesses that suffered severely through COVID had to go through a recapitalization process. And frankly, given that they had deferred the refurbishment of their hotels for so long, they continue to be a significant performance overhang in the business, simple underutilization of capacity. And you can imagine if there's a lot of construction going on inside of the hotel and you're a business traveler, that is not an attractive prospect. And even if you are willing to deal with it, you'll deal with it at a discount. So I called the stock precisely a year ago. Once you add back the dividend, you've basically been flat. So I was frankly early, but I think given that the thesis has continued to play out, it is well managed, and given that the assets are now spanking brand new, and we expect that business travel growth to continue to tick up in South Africa, they are very directly exposed to that. Given the undemanding valuation, again, there is very, very easy upside from the.
So both Devon and Kobus betting on local counters, Invicta and City Lodge. Just your analysis on those companies, Brendan?
Yeah, both of them a little bit small for us. I mean, they below 3 billion market cap, but I'll touch on them briefly. Invicta are really cheap at this point, 4.5 times forward PE. Industrial, of course, they repurchased their preference shares, so that overhang creates a bit of additional cash flow coming through the business. So interesting business. I think we would prefer Bidvest in that space. And then, of course, City Lodge, they have been revamping quite a bit. It's probably at a forward of PE of around 11. So yeah, I'm not 100% sure if that's one I would probably go for in that space.
Okay.
But again, it is looking cheap.
All right, then let's get your stock pick. Where are you seeing opportunity at the moment?
Yeah, so my stock pick today is Spar Group, locally listed retailer. Again, new management on board, really linking into what we just mentioned earlier on Boxer. Probably on a look-through basis, you're seeing in trading environment improving with interest rates cuts backdrop, possibly. They've been selling some of the international assets down as well. And it's got management's confidence that they can improve that margin on that business, resolving some of the SAP issues, and the key KZN region So this share is down 27% year to date, trading at 9.5 times forward multiple. So, decent entry point on Spar at these levels.
All right, let's leave it there. Thanks so much for your time and taking us through trade at midday. Now, that was Brendan Capstick from Nedbank Private Wealth.